Yes, guys, welcome back to part 7 of the account build live. And well, tonight, guys, we're going to focus on risk management. Tonight, I am going to go over risk management and to why I add all the positions I have, and try and make it make sense to you all. So, the build account, guys, look at it. We are floating at £755 currently. We added these extra cells up here, had a bit of a pullback, but price went in our direction in the end. But guys, we're going to look at the account build, but I really wanted to focus on my risk management and how I cut losses early, and why I do the things that I do when people see multiple positions. And so let's just get stuck in. All right. So basically, we're going to go over the DAX where I took a loss. We're going to go over coffee where I took a loss, and we're going to go over the New Zealand dollar Swiss franc where I took a loss. So basically, guys, this was I got the re-entries on this long position on the DAX. I had buy position here and a buy position there or thereabouts, right? Price. Let's now get into the hour. What I was looking at this trade, I was looking at the lower time frames. When price was in this zone, there is a very good reason why my stop loss was actually about there. My stop loss was down there. The reason I have my stop loss here, guys, is because we're on the hourly time frame, right? We look to the left. Stop loss here. We look to the left. We look at this low. We look at this low. We look at this low. We look at all these lows. And then we look at this low, right? My stop loss here, I was going to make £500 on this trade. I had £50 at risk, right? Here, where we are is £50 at risk. I put my stop loss here for two reasons. One, to preserve the capital, and two, to cut my losses early. I was looking at the price, I was looking at the structure, and I was thinking to myself, if price kept creeping lower, we're going to break this structure and we're going to continue going down. So I lost only 54 quid on this trade, guys. If it went lower, I would have lost probably about 120 quid, guys. All right. So this is where I do my best to try and cut my losses short. Being a bit unfortunate, that was the DAX, guys. You know that I took the loss on there. We'll look at the coffee. I was a bit unfortunate with coffee as well. Basically, it was a falling knife, trying to catch price at the exact turning point. I entered price here. I got taken out here. Prices just dropped. So unfortunately, guys, it's one of them things. What's going through my mind now is we have this gap here. We have this gap here. So, in an ideal world, we could wait for price to come up here, potentially go a bit higher, and then get some sell positions. But guys, on this trade, it was a one lot minimum. The account size at the time I took this trade was £355. The one lot was £300 of the account. I took a £91 loss on it. The reason I took a £91 loss on it was because the spreads caught me out. It was only supposed to be about £79, £80. But the spreads done me, so it was 91. We then got in a trade on gold, and we made that loss back and more. But guys, when it comes to timing the market, it's really difficult. Nobody knows when price is going to turn at any what level. It's just going to be down to experience and the accuracy of marking your supply and demand that's going to dictate when you're going to be able to time the market right. And the losses, we'll look at the New Zealand dollar Swiss franc, which is here. This is another trade, guys, where yesterday I made the decision. I had a stop loss in place, but I manually pulled the loss out. I just thought I don't like the price action, guys. I don't like the price action. My original buys was around this area. I saw price bottom in here, and I was thinking, right, yeah, we're gonna, start getting some upside. And then as soon as we started getting these wicks, and then pressure and movement to the downside, I thought, no, so I'm going to cut my losses. So I ended up losing £55. So we took a bit of a battering on the joint. On I say the joint. We took a bit of a battering on the build account, guys. But we don't let it affect us. We don't let it affect our emotions. These things do happen, guys. Um, we went quite deep down in deep low down into the account, and you just got to manage the emotions. You got to take it on the chin. Like every single time I put a trade on, I knew I was comfortable with risking 50, 60, 70, 80 quid. I was comfortable with that. And that comes from confidence, and it comes from experience. I know the strategy that I trade. I know myself. I've got chart time experience. I know that when one of these trades does play out, it will literally be the trade. And this is where we're now going to get into the juicy part, guys, because I have gone in big time on Euro USD for multiple reasons, and one of the biggest reasons is fundamentally. So what we're looking at now is technical analysis. Fundamental analysis is your new side of trading. So this is where the good stuff's going to come with risk management, and when you see me do multiple positions, guys. And I'm going to go through my whole process. So last night we had news. This here, let's get rid of this. This was from my live earlier. Let's get rid of all of this. So where price is right here, this is a major weekly / demand zone. I was looking at the Euro USD and I was looking at the US dollar. I've been speaking about the US dollar for 3-4 weeks, saying the weakness is coming. But I've also been saying that we have got one heck of a major demand zone down the bottom. And when we do hit that demand zone, that is going to be the direction of the dollar going forward for the foreseeable future. We will go through that, and I'll go through my reasoning and show you my whole reasoning. But for now, I have got 2 positions on the Euro USD here and 2 positions here. I've also got 2 positions here and 2 positions here. People ask me, they say, Max, why do you have so many positions? Right, so that position 0.15 lots, that's 0.15 lots, that's 0.18 lots, 0.18, 0.18, these are all 0.15s. Basically, guys, the reason I do what I do is I trade supply and demand. And this area here is supply. This area here was supply. Within supply, we do not know. There is no way of us telling by looking at this chart now where the unfilled buy orders are and where the unfilled sell orders are. For risk management purposes, you are supposed to put one position down, like 1% of your account or 2% of your account or whatever. But sometimes you do not get filled on that. So what I like to do is, if we're in a general area, a general supply area like this, I will dot 3 or 4 orders or 2 orders in this area. I will do that. I will then get filled. I will then monitor it. I will then monitor it, and then I will then manage the risk with the stop loss. So why I then got into this re-entry area, my re-entries aren't up here, guys. I did get in a bit early. Basically, guys, this is all to do with the dollar. Why I done what I done is all to do with the dollar. Let's get on the weekly. I spoke about this on my live last night, right? Spoke about, not last night, yesterday, dinner time. I spoke about this live. This area here is massive. This is massive. This was the deciding factor whether we're going to be having a strong dollar over the next couple of months or a weak dollar over the next couple of months. You say, Max, why is this such an important price area? Well, look at it on the weekly time frame. we're at a pivotal point. We have been dancing up here for a very long time. This is very, very, very strong, guys. We have not been back to this area since the 22nd of February. So the back end of COVID. We have not been to this area since COVID, back end of COVID 2022. And I said that we'd have weakness from the dollar. We had this big area of consolidation that we was dancing around in for the whole entire month of August. We broke below it. I said we had demand here. I would not be surprised that we would break this demand and continue going lower. Our next levels were this major demand. And I just couldn't see price just continuing through this demand as if it didn't exist. And just keep a very good eye on this, guys. Just look at this, memorize this structure on the dollar itself. Memorize this. We go up, go down, we go up, we go down, ba 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 ba. Yeah, memorize that. Right now, look at the Euro USD. Weekly perspective is inverted, completely inverted. We will do it backwards from where price is now. So we go down, we go up, we go down, we go up, we go down, we go up, bum, 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 bum. Completely inverted, guys. So we have truly got a lot of dollar strength to come. We are going to be mirroring a lot of this move down now, guys. We have got an extremely long-term perspective on the Euro USD. This is all on my build account. The build account is up to 760 quid. We are up to 1,130 earlier on this afternoon at the low of this wick. But, you know, I scaled in. I had my fundamental bias, my fundamental backing. I knew we hit major zones. I knew we was on weekly, daily. And I just absolutely went for it, guys. I, got caught out on the New Zealand dollar Swiss franc, got caught out on the DAX, got caught out on coffee. I really did not want to get caught out on this. And don't get me wrong, last night I had to manage some risk. I got in a little bit early and price was going up. So I took a little bit of percentage off the risk just so I could still stay in the game. Because I knew the potential this had, guys. Today, the news come out today, unemployment claims. It's just accelerated price. Once you truly understand the futures, guys, and once you truly understand what drives the market, it's none of these, indicators. It's indicators help. They give you a very good edge. But what drives price is the US dollar index futures, COMEX, NYMEX, whichever. This is what drives price, guys. The raw futures data. Yes, we're only on TradingView. We can really get into, some real technical terms and get right into TradeStation, where that is just 100% raw COMEX and NYMEX raw data, straight from the Chicago Mercantile Exchange. So, basically, guys, you've just got to be in it to win it. People probably think, well, you've got a lot of positions on the Euro USD. Guys, this is experience and confidence. This is experience and confidence. I was in drawdown with these 4 positions this afternoon up to this point. How do you react to that as a trader? It's not nice, but it's just I manage it with experience. I brought my stop losses all the way down, guys. We nearly got stopped. Yeah, I was managing the trade. This is a very, very long-term, very, very long-term trade. When price gets down lower, guys, when we start breaking this wick, yeah, I'll move all of my stop losses. All my stop losses will be below here. So I've got all this profit locked in. Look at it from a weekly perspective, guys. When I say weekly perspective, every one of these candles represents 1 week. So we're going back to right to the bottom of here is the 26th of January. We've been bullish ever since the 26th of January, the start of this year, with no major pullback. This is now the start of that pullback because we have hit some really extreme premium prices. And, this is just my long-term vision. I've got all this profit floating. it'll be absolute sod's law if price goes all the way up there and takes me out. But you know, it can happen. But guys, I'm not. I'm going to keep this trade running. I'm still going to trade this account. Obviously, with this trade running, I'm still going to do other trades. But I'm not going to pull these positions because it's positive swaps. I'm making money. That's another reason why I entered another 4 positions today, guys. I entered the other 4 positions today because I'm going to be making money every single night on this as well as trading, making money. I'll be making money on the positive swaps. So it's a win-win, guys. It's a win-win. We're just having another pullback, and then we'll continue dropping. But you know, guys, risk management. The long and short of it is risk management is very subjective. When you've got 100 grand FTMO account or you know a 200 grand FTMO account, you can risk 1% or 2% per trade. But when you're starting from a small account, like a few £100, you've just got to basically, you have to have a fixed sum of money in your mind that you're happy with losing. All right, on coffee, I weren't really happy with losing £91, but it is what it is. But the other 2 trades, I lost like 60 quid and 50 quid. It is what it is. I was happy with losing that because I knew when you know when we did time the market right that we were going to make all them losses back and more. And this is, you know, the prime example of it. We're back over 750 quid, guys. And you know, I'm not gonna let my emotions get involved. No transactions. Still £512. So if I closed all these positions now, I could press that, close all 8 positions, and it would be closed in less than a second, and the account would be at 551. You know, we was up over 1,100 earlier on. This is going to continue dropping. It's going to continue dropping. I've got some extremely exciting news to be bringing you all. The future is looking very, very bright. We're going to be bringing a lot of extremely intuitive stuff to the markets, futuristic stuff, and you know all that sort of stuff. Stick around, guys, because like I said to you, this account is going to be getting up to something ridiculously substantial for everyone to see, and bigger and better stuff is also coming for all of you. So with that being said, someone wanted me to have a quick glance at gold, so we are on gold, guys. Gold, to be honest, US dollar's strengthening, so gold's going to get weaker. If you want to get yourself a nice long-term sell position into gold, then my advice would be to wait for these levels up here. If you can get some form of entry for a short position up here, guys, I would hold that. All right. But, you know, back on the risk management stuff, risk management, guys, it is very subjective to every individual person. On bigger accounts, you know, it's easy, 1%, 2%. But when you're doing the stuff that I'm doing, trying to, you know, build this small account, you have to be very on point with your risk management. So 1.5 lots, 15 lots, 15 6. This is 0.6 lots. So the way I look at it, right, I could have one position at 0.60 lots there. Yeah. Instead of having that one position and being minus, you know, 50 quid, I would rather have 0.15 there, 0.15 there, 0.15 there. It sort of dwindles it out a little bit. Does that sort of make sense? Like it takes a lot of, yeah, just in the long run, I've always done this method. The method that I'm using here and of how I do the stop losses and entries and all that, I've always done it, guys. It's just all I know. I've never put on one position in the last sort of 3 years. I just don't do it. What I do works for me, guys. I manage the risk on it, and it's yeah, it just works for me. But guys, what a flipping day today, really. You know, the longer term perspective is there's a massive gap down here on the monthly target on the Euro USD. So that is the target. I think I say it would be nice to stay in it till Christmas. We'll just play it by ear, really. What I want to do, guys, I want to leave these cells ticking over because it's going to be making money on top of money. But I wanted to trade other stuff as well, so we're obviously building the account back up, like intraday or even gold scalps. So we'll build the account up from like 183 with gold scalps, but we'll just leave this running in the background. So we're compounding, we're diversifying, and we're getting into everything. But guys, on that, I hope you've all had a great week. Enjoy the rest of your week, and we are cooking. We are on the right path, guys. We're on the right path. So enjoy the rest of your evening, and I'll catch you later. Cheers.